Hello and welcome to another update video about ADA. Yeah, the ADA chart continues to be in the previously defined price range. There is currently no change to market structure. I have, however, modified the micro patterns a little bit, but really nothing too noteworthy. Still, though, there is a support area that now needs to hold to keep the overall upside scenarios alive. So we're going to talk about that. And please note the white wave count, which is unchanged. Okay, so in this white scenario that you see on the chart, it's obviously all about microstructures here because nothing has changed the bigger picture. Idea is that we're currently in a wave 2 pullback overall. And as long as the larger yellow support zone is holding, which goes down to 29 cents, a reversal is expected and a bullish turnaround for an upcoming rally. Okay. ADA has shown a sign of life yesterday, okay, in Friday, Saturday, and seen a bit more upside, broke above initial resistance, but that was really only initial resistance, does not constitute a range breakout yet. Therefore, it is still possible that we are forming a triangle here, A wave, B wave, C wave, D wave, E wave, and then down. This is possible. A break below 43.9 cents followed by a break below 41.8 cents would confirm that we're heading down in wave 5, one more low to 38 to 36 cents. I think that's quite simple. This, however, would be invalidated with a break above the breakout line, 52.2 cents. A break above that level would indicate that we're heading up more directly in one of the more bullish scenarios, either yellow, in which the price is just forming an ABC structure to the upside, or in orange, which is the hopeful scenario in which we are already breaking out. Okay. But that really, even though possible, it is a potential from here. If you like that potential, then, I mean, you could obviously trade it. Just note that the 41.8, 41.9 cent level is the invalidation point for the orange scenario. Also, it is a diagonal pattern, so it is very speculative, which means that any upside hope from here rests on a speculative diagonal structure, which of course could work out. It's just that it takes a little bit more evidence for me to clearly favor it. You know, it depends on which perspective you take, but it's like the levels are objective, right? So 52.2 cents, if we break above that level, which isn't far away, then yeah, probabilities shift clearly towards that orange count. Just note that a diagonal can easily fail after 3 waves. So that would be the yellow count then. But basically what it means that as soon as we get all the 5 waves completed to 64, 65 cents, that is when we can say that the larger degree wave 2 bottomed on the 13th of April. That's also when I can call these initial 5 waves to the upside, again, another wave 1, followed then by a wave 2 pullback. I will then add the next support zone to the chart, which means in very simple terms, a break above 52.2 cents will increase probabilities for the bullish count. Until then, the white count isn't invalidated. And also the white count, however, just allows for, well, it allows for one more low, but ideally I don't want to see more than one more low. Ideally, I don't want to see more than one more low, and that means that, yeah, I expect a rally in a larger degree third wave, either from here or after one more low. That's currently my expectation, but that doesn't mean I can confirm it yet. Okay, there's a difference between my interpretation, my subjective perspective, yeah, and what the market tells us. So at the moment, I think it is wise to still be cautious, because what if it doesn't turn around? What if the market doesn't care about my expectation, right? What we use and what the main value of the analysis is that you get some key support levels to watch, that you get informed about the pivots on the larger time frames and the microstructures, and that I can tell you basically when it's confirmed that we've bottomed, which is not yet the case. Yeah. Next, larger rally to the upside. I mean, once we've really bottomed in this larger degree wave 2, the third wave should take us to $2 plus, you know, way above that ideally. But let's first see if the market can turn around. I can only tell you that if we really bottom in this region, the next rally should be substantial, because it would be a third wave rally. So it's going to be more massive than what we've seen between, let's say, September, October, and like the December highs, the March highs. It should be a strong rally. Now, it hasn't started yet, clearly. Okay, if it has, it's not very clear yet. The market doesn't allow for confirmation yet. So yeah, that's basically what I'm watching for. The levels are clear. Even In the orange count, this obviously as a diagonal, we have an ABC in wave 1, we have a wave 2 pullback, and an ABC in wave 3, but this ABC is not long enough to be all of wave 3, so it's likely going to be a larger A wave, then B, then C. So in any, but again, also here, this rally doesn't seem to be over, so we might see a little bit higher, pullback in wave B, support area is currently between 43.9 cents and 46.5, and we could get one more rally from there, which should reach like 60 cents, then a 4 and a 5. That would be the ideal roadmap for the orange scenario. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.